Hey guys, it's Hassy Trades here, and today I just wanted to show you guys why risk management is so important for your trading. A lot of people they actually do trade well. They actually do make money in the stock market if they actually had great risk management. They would significantly improve their trading, because a lot of traders, what they do is, in my experience, which is what I done previously, was when I won, I would win 5% in trades, 6% in trades. However, I would end up losing 15 to 20% per trade because I had this habit of not wanting to lose. But every single trader, whether they're a beginner, professional, or the best trader in the world, they do lose. It's part of trading, and it's something which any top level trader will tell you. You've got to get used to. So, guys, I'm gonna just show you an overview of the importance of risk management, the risk to reward factor, the win rate, the stop loss, and my rule, Hassy's risk management rule. I'll go over this to make it more clear in dollars and percentage wise. So first, let's start with the importance of risk management. Why do I think risk management is important? In my opinion, a lot of traders, what they do is, let's say you have a win rate of 75%. So your win rate is 75%. And your loss, obviously, you lose 25% of the time. So for every four trades, you'd lose once. So you're losing one out of every four trades. So you're winning 3 times out of every four. And what traders tend to do during these 3 to 4 times, during these 3 wins, they'd win 3%, and the second time they'd win again. They'd probably win about, let's say they win another 3-4%, 4%, because they just take profits quick without any plan. They'll see a bit of green and they'll take it straight away, and then they win. Let's say they win 2% because they get excited without having a plan. They enter a trade and they just exit without really defining their level of risk as well as a risk level of reward. However, let's say now the fourth trade, what they do is, and this is where everything goes bad. Obviously, they've been on a win, they've been on a roller coaster. Every trade they've taken has gone like this. They've sold. However, those trades have gone higher now, and the trader is a bit angry. They want to hold longer. So for this fourth trade, they'd say, okay, let me hold a bit longer. It goes up. They're like, okay, let me hold longer. That trade goes like this. Then it goes like that. They're like, no, I'm going to carry on holding. It'll do this, and then bang. Those traders end up going down about, and genuinely, they could put down about 10 to 15%. And again, now, that is ridiculous in my opinion. That is ridiculous. So you won 3%, 4%, 2%. However, you're losing 10 to 15% on your fourth trade. And why is this so important? Managing your risk is the key basics to what any trader should know, due to the fact that one bad trade could end up making you lose your entire profit for that day. Again, psychologically, that's a bad thing, because obviously losing that much money in a trade would make any person, any trader, any human being feel like a loser, even though your success rate is so high. And I could name you traders that have a success rate of 30%, but they're green just because they've got good risk to reward. So that obviously takes us into the next slide, which is based on the risk to reward factor. And with this factor, I always, with my trades, and if you look at my trades up here on the top right corner, my risk to reward is always 1 to 2 or 1 to 3 minimum. What I do for my trades is, I enter a trade, I look for a bottom entry. So let's say I enter at 2.2. Once I enter at 2.2, I'd aim for, let's go by dollar amount. My first target would be 3%, and I'd sell, I don't know, about 20%, 15-20%, 30% max, and then I'd aim for 5 to 8%, and I'll do this every single day. And with that, obviously, with my success rate being so high, with it being, I think, 80% plus in the last month, I'm green every single day I trade. Of course, I will have losses. I do have losses on a daily basis, but my losses are so small that it doesn't matter, which is why this is so important. A lot of traders, risk to reward is their risk will be 3 and the reward be 1. So your risk to reward, so obviously mine being 1, I want $2 return for every dollar I put in. However, traders, they'd put in $4 and they'd risk $4 just for $1. However, you want it to be 1 to 2 or 1 to 3. You don't want it to be the other way around. So please, guys, make sure you have this noted in your notepad or anywhere. Plan your trades depending on obviously how you trade. And I'll just give you a few more examples on how you could do this with a $500 account. So guys, let's move on to the Excel spreadsheet. So let's say you've got your overall capital in your account is 10,000. However, let's say you're using $500, which most beginner traders, I wouldn't trade more than $500. Obviously, there's a lot of traders out there that obviously what they do is with you guys just don't understand. They use you for volume, so they'll tell you, oh, I do this for free, I do that for free. However, all you are to them is volume, but you guys won't ever realize that. So what I want you guys to always do is use less capital until you learn. I want you guys to become independent traders. So let's say your capital is $500, you buy at a price of $10. Your sell price is, so you're aiming to sell around $13 plus, and then you're risking I risk 2 to 4% a trade. So you're risking 2 to 4% a trade, and you're gaining. You want a minimum of average. On average, you want 5 to 8%. I don't risk 4%. I risk 2 to 3%, maximum 2. I really like my bottom up trades. And then I'll aim to make a 6% plus a trade. Obviously, right now with the market, it's quite hard to do that. But I do get the odd 15-20% gain, which obviously takes my account to the next level. So I'd aim for 5 to 8%. It depends on the phase of the trade, because obviously, according to wake-off accumulation, we have 5 different phases. And sorry, that's actually the area wave theory. But according to wake-off, you have your accumulation, your distribution phase. So depending on that, I do look at my trades again. Let's say you use $500, you buy at 10, you sell at 13. Sell price, obviously 5 to 8% gain. It wouldn't be 13, but you guys get the gist. So you're risking 2%. You want to make 5 to 8% a trade. Let's say you make your 5 to 8% a trade. That's what. Let's say you make 8%. So trade 1, you make 8%. 8, 16, 24, 32, $40. 40. Obviously, I'm gonna tell you that this is compared to my risk rate and what I offer. Again, you use 500 again, and obviously you don't want to. So obviously, a lot of beginners they trade the amount of trades they want to trade a day. They don't have a plan, and I always recommend as a beginner you should trade no more than 5 trades a day. Again, let's say 2 to 3% risk maximum, 5 to 8% gain. And I'm actually being quite generous with the game because I think you could, on a daily basis, you could get more than 10% quite easily. Again, you make $40. A lot of people don't understand this basic concept, and I'll tell you where you go wrong. So let's say you take 3 trades today, $500. So this is like literally it's this easy, guys. 2 to 3% gain, 5 to 8%. Again, you make another $40. And now let's say you take a loss. So you're gonna take this loss soon. Now you use $500 again. So you only take, let's say, 2 to 3 days, 5 trades a day. Let's say you take 5 trades a day, 3%. Let's say you do lose. Then you go see 5 to 8%. You gain $40. You lose 3%. 3, 6, 9, 12, $15. And then you lose again. Let's lose another $500. 2 to 3% risk. I know I'm going slow, guys, but I want you guys to understand the concept without actually. Let's say you use actually bear like I don't lose 3%, I lose less than 3%, but I'm just doing 3%. Because still, it still looks really good. But, so yeah, so look. And that total, obviously this is minus 15. Just give me a second, they put the minus on there. So guys, if you look here, look, $40, $80, $120 in gains, $30 in loss. That is a grand total of $90. So this day you made $90. Now think about that, guys. And your success rate for this is what? 60%. All you need is a 60% success rate. 60%, guys. It's that easy. However, and I'll tell you where a lot of traders go wrong. A lot of traders do this. Me, I should do this. I should do this. I can't really speak. So I shouldn't be too, now let's say you risk 2-3% gain. So, let's just do this way. You know what I mean now. So, what these traders do is, let's say this is how much they don't. Actually, they risk way more than this. They actually risk 10 to 15%. This is what our traders do, and you probably know exactly what I'm talking about. You'd probably be, oh, that was me. That also wasn't me as well. So 10 to 15%. To 15%. And then the gain. Come on, copy. So look here, guys. So we got what they do is they'll only gain 3 to 5% because they get excited as soon as they see a bit of profit. 3 to 5%. And then look, $500 they're using. Not 500, I'm wearing. They use $500 every time. I wouldn't be surprised if they use more. As soon as they get excited, they start using more. But let's just say in this scenario they use $500. So every time, let's say you're winning more. Let's say you're winning 3 to 5% again. 5%, 5, 10, 50, 25. So you got 25 there. So let's say you're making 25. 4 trades. $, and then you lose 15%. 15, 30, 60, 75. So that's $75. And then you're like, okay, now I've lost this $75, and this is where the mistake they make. Alright, let me make another trade now. Because I lost the 75, I'll make another trade. Just because I've lost the 75, now I'm mad. I'm sad. I'm mad because I lost $75 because I didn't calculate my math properly. $75 again. Now they're red for the day. They are red. You're red. Like literally you're red. Like there's no point even trying to deny it. That's you. You could be green because of your risk management. Because you have great risk management, you could be green. Or you could be red. How are you red here? Look, you've won 4 times and you've lost twice. Surely you should be green. But no, it doesn't work like that, guys. You're risking, you only make it $25, but you're risking $75. In what world does that make sense? You know, guys, that's what a lot of traders mistake. They make that mistake of risking $75 just to make 25. So with this, look, you got $100. You got $100 gain here. You're getting overconfident, overexcited just to lose $150. You're minus 50 for the day. And you'll keep repeating that process. If not, it'll get worse because you'll keep trading. It'll get worse. So what I recommend, guys, is take 5 trades a day as a beginner. And trust me, guys, 3 to 5 trades, no more than 5 trades. Use small capital, build your strategy, and risk small. Look for bigger gains, and your trading will change, guys. I promise you. I promise you that your trading will change. A lot of my members in my Discord group will tell you the same thing. Not everyone will do it. It's a fact because traders have become gamblers. But yeah, that's your risk to reward. Again, if you look at my win rate, like I've mentioned repeatedly, 85% plus. And with this technique that I use, you'll drop all your stop loss bags, because a lot of people are bag holding, and even I used to bag hold because I never used to think that I could lose. For me, I would think a stock would only go up. By the time I'd realize, oh shit, it's too late, I'd be down 20%, 15% plus. Some people could even say they lose 50, 60% just because they bag hold. Like, it doesn't make sense to me in any way, shape, or form. It's like I can't comprehend why people do this. I simply can't. Even though you explain to them, oh guys, please don't, they still do it. And obviously, it's Hassy's rule. My rule is, profit taking rule is, first target, I always take small profits. Second target, I aim for 5 to 8%, and I take around 50% of targets. And then I'd aim for the 10 to 15%, 20% plus, and I just carry on scaling along the way. But like, guys, this method changed my life. So follow my rules, and I promise you, you'll become a successful trader. Of course, it will take more than that, and you don't need to think about trading as an algebra, I don't know, Einstein type of equation, which a lot of traders do. They start making models. They start this model, that model. You have to do this model. No, guys, there is no model in trading. You don't need to use models to become a successful trader. You don't need to make this hard. Use the simple trend line. Use a simple shape. Use a simple pattern. Use supply and demand. Okay, guys, I hope you guys enjoy this lesson. And guys, you really need to, if you have any questions, pop it down in the YouTube comments below. Hit the like button, hit the subscribe button, and I'll make more videos like this. I'll try helping you guys as much as possible. Follow my Twitter, follow Tiger's Twitter, DM us whenever you want, and have a great rest of your weekend, guys. Thank you for joining.